Welcome to our weekly Forex and Futures forecast. Good to have you back. As always, we need to remind you trading is a risky endeavor and not suitable for all investors. We've also got our third book out. We're very proud of that. Very powerful book. We definitely encourage you to take a look at that. Risk tolerance threshold theory definitely helps us in our analysis and our trading, and we're happy to say it's helping our clients, and we're getting a lot of great reviews on that book and some really good feedback. So we appreciate that, and we know the value of it. First market we're taking a look at is the Australian US dollar. Aussie US dollar ended Friday lower. Interesting. A bullish, very friendly U.S. non-farm payrolls, not necessarily bearish for the Aussie, but at the end of the day, the Aussie dollar took it that way. Dollar strength was the order of the day on Friday, so the Aussie closed lower. We've been short-term bearish the Aussie overall now for about a month or so, and we're not going to change horses just yet, that's for sure. It came within 15-20 pips of our downside target, launched a short covering rally, but we think you will see that 101. We think, in fact, that you'll probably get a little bit lower than that. Secondary pattern is still higher. Really don't want to guess what's going to happen too far out, but I think you'll see some consolidation around the par area, the 100 level in the Aussie. We'll have to see. For now, we're still definitely interested in selling rallies, otherwise taking sell signals in the Aussie dollar. Next market, the Euro US dollar. Here's another one where we're interested in selling rallies, taking sell signals for sure. You just barely closed below 130. I think we said last week that you need a couple of closes below it. There it is. There's your second close below it. So it becomes less and less likely that you'll get any kind of a sizable short covering rally here. I thought with the market holding above 130, that increased your odds of that potential short covering rally. We don't see it happening now. Well, I shouldn't say that, but we don't see a large one. I think you'd almost have to rule out a potential for a double top. I've got the 50% level marked. That's still, there's still an outside shot. You'll see that. Overall, however, we're definitely looking to sell rallies and take sell signals in the Euro US dollar. You've got the day-to-day patterns down. That long-term primary is down also. So we're pretty bearish on this pair. And we see more of the same. Selling rallies. Pound dollar, pound really continued to weaken. And this really opens the door to the next level. You got a couple of weekly closes above, you got a couple of weekly closes below. You had a key level in here. Well, you had one weekly close below 150 now. So, hey, the downside's open. Our next target in the pound would be, 46.85 or so. You look at a weekly chart, I think there's probably more room down there. It looks like potentially your pound is a leading indicator market. And you can't rule out then a test of the 2010 lows, potentially the 2009 lows. I think you'll see 145. I think you'll see the 145 handle here. Next market would be dollar yen. Dollar yen continues to rally. Our overall upside target, longer term upside target's 100. Boy, you're a lot closer to that now than we would have thought that you could have gotten a month ago. As we pointed out, this big downturn, that big turnaround on the Italian election did no technical damage whatsoever. This week you went on to make higher highs in that market. So a very strong market, secular bull market continues in dollar yen. We're pretty bulled up there. You have to just continue to buy dips and otherwise take buy signals. On the commodity side, gold, there was some talk that because gold stabilized that there's a possibility of a bottom in here. We think that's just talk for now. Granted that it is a higher low than the low we saw this past summer so far. However, your patterns are still aligned bearish. If you take a look at a weekly chart, we still think there's a possibility that you'll test at 1500, probably sweep 1500 for stops. You probably get below there. We'll have to see. The outside chance that that doesn't happen would be if you had a stock market correction. If you had a serious stock market correction, we suspect that'll put a bid in the gold market. For now, though, you can see the day-to-day is aligned down with that secondary pattern. Actually, your short-term primary pattern's bearish also when it held that. So you got a lot of things pointing lower for gold. Most of all, anyone who's really bought in it in the last 2 years is probably pretty close to being underwater on it. That alone probably means that you'll test these risk tolerance levels just below here. You've got one right there approximately, just above 1500. We think you'll have a test of that too. So potentially you test that even and chip some stops out below there, and then we'll take a look at it. Next market, the U.S. stock market. What did we say last week? A market gets that close to an all-time high, and generally you're going to go after it. So the mighty bull here continues to horn its way higher. What can you say? You don't want to get in the way of that. U.S. economic numbers continue to support that strong stock market. You had the U.S. GDP came in a hair higher than expected, still going forward. You had a big employment number this last Friday that came in quite a bit higher also. So economic data continues to support the U.S. stock market. We've also written a helpful article over the weekend. You can see that on our blog, our Seeking Alpha blog. I Am a Trader, the 6 Stages to Trading Success. Also, we'll put that link just below this video. In addition, if you want to see what we're doing at Trading University, you can go to our education website. Right there, it's only $199 per month, and you can pay as you go, so you can opt out at any time if you don't think what we have is worth it. You also get everything up front, too. You get the master's course, the graduate course, master's archives, advanced concepts, everything you get up front, including one-on-one mentoring and the Skype chat group. Or perhaps if you're not interested in the one-on-one mentoring, you just want to find out what's going on, you can get in the program. You can have access to everything on video at eostrade.com. In fact, if you open up a live account with Forex.com, FXCM, or OpenECRI on the futures side, you get the master's program for free. So come and see us at EOS Trade also. Thank you.